Welcome to Healthcare Disability Insurance and HSA Funding Accounts. The agenda for this presentation is based on helping to solve the puzzle. This will offer a healthcare overview, including definitions, plan types, a discussion of private versus public plans, etc. There is quite the alphabet soup of health insurance, and specifically with FSAs, DCFSAs, and HSAs. We have ancillary products to present that include dental, vision, etc., disability insurance and what that might mean to you, and then we'll wrap things up. Key elements on any health plan is to find a balance between the plan options, premiums, deductibles, co-pays, and really what makes sense for you and your personal health insurance needs. We always like to recommend that you confer with a tax advisor to address tax liabilities and implications to health plan choices. For an overview of healthcare, we're going to give some definitions, talk about plan types and private versus public plans. But let's not forget, if you're under 65, great. But what if you're already over 65 or getting ready to turn 65 and are eligible for Medicare? A basic definition to discuss is healthcare versus health insurance. Healthcare are the steps you need to take to maintain or restore your health when something bad happens. Two major definitions are the difference between healthcare and health insurance. Healthcare are the things that you need to keep your health healthy, and health insurance is the financial insurance product that covers the costs of doctors, hospital visits, etc. There are many different types of health plans, and in fact, many more than those listed here. We're going to touch on several of the items at the top of the list, but we'll spend a little bit more time with disability income insurance, as well as life insurance, annuities, and long-term care. Most of us are on a private insurance plan, and that means that that is a plan that we've either purchased ourselves for our family, or it is a private plan offered through a group employer plan. Once we get over 65, we go on to Medicare, which is a government plan, although some of us that are under 65 may need assistance, and we are able to qualify for Medicaid. As a reminder, when you are under 65 on a private plan, these plans will allow us to cover an entire family, such as spouse, children, and other dependents. Once you are eligible for Medicare, any of your children, as a reminder, when you are under 65 and on a private plan, these types of plans allow coverage to extend to dependents such as a spouse, your children, or other qualifying dependents. Once you are eligible for Medicare, Medicare is considered individual insurance for you and you only. There is no dependent coverage, so your spouse, children, or other qualifying dependents will need to continue to carry a private insurance plan. The alphabet soup we are planning on discussing today includes FSAs, DCFSAs, and HSAs. We'll dig into each of them in just a moment. The flexible spending account pays for certain out-of-pocket healthcare costs, such as co-payments. Unfortunately, for those of us that are self-employed, you are not eligible to open an FSA. We strongly urge you to work with your tax advisor to determine if you qualify for an exception. For example, if you're organized as a C Corp or you're a W-2 employee of your own business. The dependent child FSA works very much the way that the FSA does, and in short, those of us that are self-employed are ineligible. However, we do strongly urge, again, that you work with your tax advisor to find out if, as the custodial parent, one or the other may enjoy some tax benefits and will qualify for a DCFSA. The health savings account can be a great tool for self-employed individuals because you're putting money away post-tax. That means that when you withdraw funds to pay for qualified medical expenses, you've already paid the taxes on it. Caution, this type of savings account must be used with a high deductible health insurance plan, usually a bronze plan. Also be aware that there are limits set by the IRS, so as always, we highly recommend you work with your tax advisor to determine if an HSA is a solution for you. Ancillary insurance plans offer medical services or supplies that are not provided under your major medical health insurance plan. Remember, ancillary benefit plans are separate insurance plans and have a separate insurance premium. These plans are secondary to your major medical insurance, and they're designed to fill gaps where your major medical insurance doesn't offer coverage. Disability insurance helps protect you, your family, and your business financially while you're still alive. Life insurance protects your family and your business from financial loss after you've passed away. Disability insurance comes in two types of plans, personal or business. Personal is going to cover your household expenses, and business is going to cover the business income and expenses. For example, should you become disabled and need to hire a business manager to keep the business running, a business disability insurance plan will help cover those payroll costs. Target 60 to 70% of your earnings, and as always, consult with your tax advisor to determine what's appropriate. Many states have instituted a family and medical leave insurance program that ensures every worker has access to paid leave to take care of themselves or their family during life circumstances. This is unlike FMLA, which is a federal unpaid job protected leave. Small businesses and employers can usually opt out of this program, but again, we advise you consult your tax advisor to understand how this would work for you and your business. If you're interested in disability insurance, the next step is to perform a needs analysis. You will need to collect some information first and then plan on discussing what you plan on spending, what are your tax considerations, and most importantly, what are the benefit triggers, because there are triggers such as wait period, benefit period, and most importantly, your plan will define what exactly is a qualified disability. Quick review of life insurance includes the discussion of term life versus permanent. Basically, term life is like renting insurance. It is only designed to last as long as, say, your mortgage, while permanent life insurance is designed to have cash value and gives you other things like borrowing power, helps you fund a buy-sell agreement, and can even include things like long-term care riders. Life insurance riders add flexibility to your life insurance policy. Whole life, also called permanent life, has many items including renewability. There are triggers for terminal illness that allows you to tap into the face amount, and even including a waiver for disability. The term life insurance policy usually includes all of the above and can be converted from a term plan to a whole life or permanent plan. Life insurance payout comes in many forms. However, again, caution, be advised, there are little sticking points. For example, if you are the beneficiary of an annuity that is paying a death benefit over an agreed set time over a number of years, upon your death, that annuity may no longer pay out to your family and your beneficiaries. Any discussion of life insurance and long-term care deserves a conversation about formal and informal advance directives. We recommend a formal advance directive, which is a written statement of a person's wishes regarding medical treatment, etc. Any conversation about life insurance and long-term care requires a needs analysis. For self-employed individuals, that should be a combination discussion that looks at the business needs as well as the household needs. For example, if your survivor is going to be selling the share of your business to your business partner, there needs to be an updated business valuation available. Thank you for spending a little time with me to learn a little bit more about health insurance, life insurance, and disability insurance as it relates to the self-employed. If you have any additional questions, please feel free to reach out to me at my email address below. You can always call our office at 303-278-2278 and schedule an appointment. I'd love to chat and get your feedback. Again, thank you so much for spending time with me today.